Today, all emerging economies depend very much on China, because in the early stages of industrialization, when a country like China has 1.3 billion people, they demand a lot of resources, and as a result of this increased demand in resources, prices after 99 went up, and that stimulated the resource producers of the world, whether they are in Latin America, Africa, Central Asia, Russia, Middle East, or in the Asian region, including countries like Malaysia, Thailand, Indonesia, Australasia. And so the increase in Chinese GDP over the last 12 years, which has run at about, say, plus minus 10% per annum, drove the economies of Southeast Asia also favorably. But now, in my view, the Chinese economy is slowing down far more than the published statistics would suggest. And if Chinese growth goes from, say, trend line 10% per annum to what I think is more realistic, 4-5% per annum, then obviously it has an impact on resource prices, on commodity prices, and has an impact on the economic growth rates of countries like Indonesia, Malaysia, and also in Latin America, countries like Brazil and Australasia. So as the Chinese demand slows down, it affects these countries, and in turn they buy less goods from China, and so you have kind of a downward spiral in trade. And in my view, the emerging markets are actually quite vulnerable to a slowdown in China. And we clearly, in countries that publish relatively honest statistics, we see actually a meaningful slowdown in economic activity. It's not that Asia is at the present time in recession, it's just that many countries are no longer growing. There are a high level of economic activity, but they are not really growing. Actually, a few years ago, hardly any foreigner were interested in Malaysia, and I started to invest, and it has been a very favorable investment, because first of all, the dividends on Malaysian stocks, even after the increase in the market, are relatively high. And as a country, I find it reasonably well balanced. In other words, they have different sectors, they have industries, and they also have resources. And unlike, say, Indonesia, the population is relatively small compared to the land mass. And as you pointed out, the banking sector is actually financially relatively strong. So I still hold my Malaysian shares, and have a reasonably favorable outlook for the economy in Malaysia. In the last few years, the Thai economy has done fine, and from the lows in 2009 until the recent highs, the market was up 4 times. And I've written about this not long ago. In my view, there was excessive speculation. Also, we have to see, and that does not only apply to Thailand, but to other countries as well. Over the years 2000 to today, there has been, say, meaningful credit growth. And especially following the financial crisis in 2009, governments pursued expansionary fiscal and monetary policies, and so credit growth was very strong. And whenever household debts go up faster than the economy, as household debts as a percent of the economy increase, it will signal a period of more pronounced slowdown thereafter, because you can't increase household debts indefinitely, as we've seen in countries like the US and also now in Australia and Canada and so forth. So my view is the Thai economy has done well, the financial market has done well. I can see the theme of, say, this Indo-Chinese region in the east, Vietnam, then closer in the west, Laos in the north, Cambodia in the south, then Thailand in the middle, and then in the west you have Myanmar, India, Bangladesh. That this whole region will be linked with transportation ways and also with trade links, including China in the north, Yunnan province, and in the south, Malaysia, Singapore. So the economic growth rates, I think, will be fine. But we have to also see that at the present time, there has been a quite significant cost of living increases in Thailand. The household debt level is high, and there was a consumption boom. And if you look at economic statistics of Singapore and Thailand, in the case of Singapore, GDP contracted in the fourth quarter of 2012 is now flat. And in the case of Thailand, year on year, there has still been some growth. But from the fourth quarter of 2012 to the present time, GDP is down and industrial production is down. So you asked me before, what do you see in terms of macroeconomic development in Asia? I think we're not in a recession in Thailand, but we have no growth at the present time. The other point I'd like to make about Thailand, we have heavy intervention by the government in the economy. Some people would call it crony capitalism. And I think it will not end very well. Now, the stock market having gone up so much, including Indonesia and the Philippines, I think is not particularly attractive. I still have investments in Thailand because some companies have high dividend yields, so compared to the bond yield, I think it's okay. But I think the market will go lower.